We want to look at the level where the algo is deciding the next time if you want to change direction, and that's IDR levels. Nice opening gap over here. Let's mark this. Let's finish the ODR quick. What do we have here? That's contraction. Correct. We have contraction inside the RDR. What are we expecting when we see a contraction inside the RDR? When we see a contraction model, what will be the conclusion out of it? We will see a squeeze either to the upside and to the downside, or to the downside. Exactly. So as we expect a squeeze, we will wait a little bit. We are waiting for a confirmation before we do anything. And now we have the confirmation to the upside. So we are looking for a long entry. Potential areas. Here is a little volume imbalance. Anything else? No. This area should support price now. The gap should be supporting price if we are looking. So this will be a strong area. So any return to the IDR or down below here, I will take long. So confirmation done. We have a volume imbalance over here. So like I said, I go directly long. I'm expecting a squeeze. ADR is telling me I'm looking for a long. As I explained, gap plus IDR plus volume imbalance below here. I'll take a long. Stop goes 2 ticks below here. 1, 2, that's it. As we are expecting a squeeze, my next target will be at least the DR level. Potentially, if you expect a squeeze, you could have your target over here. But I'm taking the low-hanging fruit today. I at least want to see these DR levels to be taken. Let's see how it turns. So as we can see, reaction directly from the IDR level plus back into the volume imbalance. We are not able to close above it yet, so it's not done yet. So rejection again, now we are closing above it, that looks good. Still staying above the IDR. See how this volume imbalance is now supporting price. Every time we come there, the algo turns on and we go up. So that's nice. Stop on entry now. You see that volume imbalance, price returns to it, closes it. Here another volume imbalance, so I don't worry about price right now because I know we will go up, and once we come up here, it's most likely that we will go higher. Squeezing, so explosion into one direction, and we are getting tagged. We are out of the trade. Nice trade. 7.5R, 37.0, and that's it. This one would have worked out. Let's see if price will go higher or not. So by the way, I don't have to mention that that was my entry here, but there was the entry over here again. So even if you don't take the first entry, which I have taken, that would be the next chance for you. Then we go up, and this would be also a very nice entry. So we close and we are rejecting from here. So that would be a next potential entry for you. Just based on DR. Nothing else you have to think about. Volume imbalance, DR high level. We are going clearly above, returning, and we are rejecting clearly. So any entry here in this candle with stop below here would be fine. Even stop below IDR if you want to have a wider stop. Let's say you enter here, your stop would be here. 2 ticks at least below the DR, even if you want to put it below this volume imbalance. That's also fine. Target would be the same. IDR level still 2.5. A lot of entries, not always the one I have taken is maybe even the best one. So this one could be if you take a crazy stop like I like to do, that would have been even better than my entry. And if you believe into early confirmation indication, you could have taken here the rejection from the opening price. That's another entry which would have been also very nice. So a lot of entries, not only the one I show you or I trade in the spec testing. There's a lot of things you can do on top of it. So ODR session we're having now. So we already had our squeeze. This area becomes important again. I would guess so. Same like the day before or the session before. So if you want to really see a squeeze, we have to break these levels in my opinion. Let's mark out the areas for potential long entries, opening price. We have these levels, nothing more interesting. 350, so 10 minutes later, look, opening price, look at it, completely random. We are expecting a squeeze to the upside. You know what, I just take this long. So squeeze to the upside, we are going 2 ticks below the orange line, 1, 2 ticks below. Next target would be new high. We have equal highs over here, so let's have the target over here. I'm still not trusting this area up here, but technically now this one should be the target. There is so much liquidity up there. We should reach for that one for sure. Thinking about it, I'll leave it over here, 0.5. So there's a lot of juicy buy side liquidity over there. Let's see. Almost stopped out. That's when people look at my charts and they don't know anything about DR, they are thinking why he's putting his stop over here. So everyone here should understand why it's over here, right? Yeah, let's put our stop on entry. Close again, not stopped out, we are still in the trade. So we take the first buy side liquidity, which would have been a valid target. I'm greedy now because at the end of the day, 37 hour and it's not even a week, so I can be a little bit more risky in my trades. That's how I trade. Again, this level, important again, rejection again. So let's see. So now we are returning to the DR levels. Look at this. Okay, I'm taking another long, so stop on entry from the first trade anyway. I'm gonna take 2 ticks below target 0.5. So this one is stop on entry. I'm risking another R. Let's see how it turns out. So not stopped out yet. We are reaching the relative equal highs here. And we are ticking both trades. 49.5 R. Makes sense to everyone, this trade. You saw the importance of this area. We saw the importance of the buy side liquidity, and we take the low hanging fruit. What time is it? 6:50. So still ODR. Let's see if price will go higher. I'm not interested in any more trades right now. 8:15 would be a nice entry again over here. I'm quite good, so I don't want to take another entry now. So there seems to be news. It's a Friday. So we're taking out everything over here. So news day. Let's see, the RDR news is over. So we now have taken literally every buy side liquidity over here. So the next level would be up here. Still looking on the overall picture, still looking like short. That was a fine squeeze into both directions. So let's see. Let's see what RDR is telling us. So early confirmation, but rejection from the DR levels, so we're not gonna trade this. We want to have a confirmation at CPI. If you trade on CPI, you want to least wait for a confirmation. Okay, now we have a short confirmation here. We are looking for short trades right now. It's the end of the week, it's CPI, so I'm gonna be careful with my trades. So we're reaching 0.5 standard deviation. We are rejecting right now from there. We go up directly to the DR levels. I think I can risk another one over here. See the next candle. Closing above, I don't like it. That's too big candle, but it's confirmation. So let's take a short trade. Technically you can lose here because it's a CPI day. 2 ticks above the IDR levels. Target, new low. It's not worth it. So no, I can't take this trade. Here, 1.3. No, I would have to go down here. Let's give it a try. We are making a new low. Nope, didn't. So now we have a new low. I can't put my stop on entry because like that's in the middle of nowhere. I could potentially reduce my risk and put my stop over here. But based on this, we should go lower. Yeah, as expected, stopped out. So like we said, CPI day anyway, not a trading day. Maybe another short. Yeah, we have to try it. Or I have to try it. Target new low. We are very close to it, so we're gonna make a little bit higher, like around here. And stopped out. That's -2 in this session. That's it. So that's it. That's 1 week. So we had 25 trades, is that correct? 16 plus 9, 25, 13 winners, 3 break even, 9 losers. So that's 60% win rate. Quite impressive numbers of R. Obviously, I would not trade every day the ADR session. No, I'm literally not trading the ADR session most of the time. So keep that in mind. I'm normally looking at ODR and RDR, but we are backtesting. That's realistically all the trades I would have taken. Quite a lot of losing trades, like fields for me. Like my personal win rate is above 70% over almost 10 years now. That was definitely more losing trades than I would have normally. But like, okay, it was a FOMC week and it was a CPI week, so I would not trade this most likely. That would be 2 losing trades less. It's just what is happening. I'm not making this up. Everybody who studied my videos, everybody who watched my videos should understand why I'm taking the trades, where I'm putting my stop loss, what is the reasoning behind. Everything has a rule behind it. Price is king. Price is never wrong. Opinions are always or often wrong. I give you a frame to work with where you really can base your opinion about price based on really what is happening on levels. These areas, these reactions from the prices you have seen, which led to me taking trades, they are there. You can see them every day. For everyone who is starting with DR and maybe even starting with trading, ES is just the top-notch instrument to take. And I don't see any reason. If you have a funded account, every funded account is offering ES or SPX. The point is why I don't like Forex. It's very manipulative because too much counterparties, central banks, governments, and all of this stuff is involved in currency prices. So you have interventions from the central banks. The central banks can literally print money to stabilize. It's really something which you can trade. And of course, there is a lot of action there and there's a lot of opportunities. But if I talk about probabilities, it's just not comparable with equity markets. And that's also why I choose ES. Just see it from this perspective. The Dow Jones has 30 shares inside, 30 stocks. The Nasdaq has 100 and the S&P has 500. So what do you think is easier to manipulate? The 30 stocks in Dow Jones are the easiest to manipulate. The 100 stocks are definitely easier to manipulate than the 500 in S&P, and that's also one of the main reasons why I stick with S&P. All I'm doing has a very, very good reasoning in the back of my head, and it's not only in the back of my head, it's just data I gathered when I was working for the professional companies. It's just facts which I know. You should know by now, if you're watching my videos and my streams, that I'm really looking to get the best edge I can get. It's very hard to tell. I can't explain you when a whip is starting. You know, whips are a very basic mechanic of the algo. I can't explain how it works. I would need the data I had as a professional trader. Like all the companies who are running the algos, they have different data set. With this data set, I could calculate when a volume imbalance is important or not anymore. But as a retail trader, we don't have access to this data feed. First of all, it always needs to get filled. And the second, after it's filled, it's still visible to the algo. That's what you have to keep in mind. Like, consider every volume imbalance as a point of interest, as you do DR levels. That's all I can tell you. And rule of thumb, 3 times. That's what I already said. These are important volume imbalance. This is a very important volume imbalance because it's aligning up with the DR levels. So look out for these areas. All you have to do when you're trading DR, look at price, analyze price, and look at the levels. You don't have to look here. You don't look for anything. This is the next, like, once price is through this level, the next time you're looking is this level, which is the orange line. This, we are not interested. We don't care about this. This is just movement. We want to look at the level where the algo is deciding the next time if you want to change direction, and that's DR levels. If there is a volume imbalance on top of it, that's it. At one point, you have to say, I see a rejection and I enter the trade, and if I lose, it's fine. It's completely fine. Look at this, even with 30 losing trades. I could have taken randomly stupid trades and we could add this up to dirty losing trades and I would be still very profitable. That's just the power of the DR.